Hey, everybody. Jeffrey Beamer here, Senior Investment Strategist over at ewotrading.com, and welcome to Earnings Call. We've got earnings cooking today, including a 50% return on the trade that we gave last week. We're going to talk about that in just a moment, but here are some of the stocks that we're going to talk about today. We're going to talk about Walmart, UBS, StoneCo, Palo Networks, Target, Lowe's, Analog Devices, Intuit, and Estee Lauder, just to name what the top headline stocks go. We're going to get to that in just a second. Now, remember, we talk about a lot of stocks here. So anytime you want to jump ahead, you can do so by using the chapter feature at the bottom of the video and just skip ahead and find the stock that you're interested in. We're going to start here. We have a quick look at the S&P 500. This is our proxy, the SPY, Spider Index Trust. You can see we're having another good day. I've got a little trend line on there showing a very vertical move, but we're here to talk about earnings. So let's get to some of the headlines today. Estee Lauder came out this morning. The forecast was bleak, and the CEO is departing. He's actually retiring. So as we look at the chart, I wanted to throw in here that these two arrows that you see back here in the past, these are the past earnings. Let me get those on the dates. Okay. And I don't know if the CEO leaving is like a good thing or not, but it is, as you can see here, the stock is just not moving. In fact, it's flat for the day. So the question is, you got a CEO that's leaving and you have a bleak forecast. Well, as you can see, investors and traders alike have been selling off this stock, and maybe that's all baked in. If I was looking at this now and I throw a couple of moving averages on here, we are actually trading right between my short-term moving average, which is the orange line, that's my 21 period, and my 10-period moving average, which is my the blue line here. And you can see we're being squeezed between there. I would anticipate probably a move, but it didn't happen with this earnings. So normally we see a big pop with Estee Lauder, and it just did not happen today. So we'll see if something is being cooked along the end that comes out in the next few days. Okay, moving to the next headline here, we have Walmart. Now, this is a big name that we want to pay attention to because these are second quarter results, and we were looking at a 7% move last week on Walmart. And guess what? The stock moved 6.5%. Okay, you can see the gap up there. But that was only a 6.5% move. And this is a good forecast. They had good earnings. Good news came out. And that is encouraging considering we're in August now. And right around the corner, we're going to get into one of their biggest seasons of the year. That could cause a lot of volatility for this stock on the next two earnings cycles because people are going to be looking at comparable numbers year to year to year. And we'll see how healthy that consumer really is as we go into this fall. All right. So speaking of the consumer, and let's talk about UBS. All right. This banker actually, we had looking for a 6% move last week, and the stock was only up 5.3%. So right in the range that we were expecting. Now, the headline here was essentially that it's nice to see when you get some of these financial guys that have a similar opinion as you. And my opinion of the market is that because of the inverted yield curve that we currently have between short-term interest rates and long-term interest rates, that we are headed for a recession. And he's saying the same thing, is that, hey, it's not time for the recession yet. It's still looming. It's still out there, but not yet. And, the stock is reacting positively to that. Okay, as you can see, it gapped up 5%, and then it's just trending sideways right now. Okay, so that is our headlines for this week. I know you're anxious to kind of get into what stocks are happening with what, including our trade from last week. So let's dive in there. We got a lot of we have several more big names coming up this week. Let's start at the top of the list. We did have Estee Lauder this morning, as I mentioned, and we already went over this chart. The stock just did not go anywhere. All right. But next on the list is today after market close is Palo Alto Networks, and we're expecting a move of over 10%. In fact, around 13% for this particular stock, because that is the historical average over the past year and a half. Okay, this stock tends to be a mover through earnings, and you can see the hard rally here may have already that move might have already happened, but we'll see what earnings have in store for us. Okay, so also on the plate as far as a mover goes is Target. We're expecting a 11% move on Target. As you can see, my pointer here is right on that earnings date. That would be later this week for Target. And if we look at more data on the stock, you can see that it's relatively quiet except around earnings. So around earnings, this stock typically moves. I'm going to draw the last earnings event is right there, that little gap. And then the previous earnings event is right here, that gap. Okay. And we're expecting something similar, something similar here. And that, so Target usually moves a little over 11% through earnings. All right. So we use a certain type of strategy for that. All right. So those are just a couple of the stocks that we are looking for breakouts. Estee Lauder didn't happen, but we still have Palo Alto Networks and Target on our list, as well as Keysight tomorrow and Workday later on. But we have some quiet stocks that we also want to touch on. So let's begin there, and let's talk about Lowe's. We're going to begin with Lowe's. LOW is the symbol here. Believe it or not, Lowe's does, although the stock does show some volatility and is trading around $240 a stock, a share, right through the earnings event. As you can see with my marker, we moved less than 4% historically now. Lowe's is a mature company, and it's when companies mature like this and their margins are reduced, and they just need to churn and stay within their sector, and they're no longer a growth stock. This is what happens. They quiet down through earnings. We look for certain expectations, and otherwise, typically these stocks don't move very much. All right. Another one on our list is Analog Devices. All right, ADI. And again, another stock that has less than a 4% move expected. And again, that's just history telling us what this stock does. So the day that we have earnings, which is this Wednesday, August 21st, before market open, we're expecting a quiet trade for Analog Devices. All right, and another big kind of name, but the stock is it's a big company. It just doesn't move much anymore. And one that might surprise you is right now, and that is Intuit. All right, Intuit, again, a well-known stock. This stock trades at $658. Probably need a stock split here, but a move less than 5% is expected from Intuit, and which is really interesting that given some of their struggles lately. And let me pull in more data on the chart, and you can kind of see that. Well, hey, this is even though they face some challenges, they're cooking right along. We are trading up and around new highs for this stock. And anytime you get a pattern like this where the stock is kind of trading, it's up, on average between $600 and $650. That's a new range for the stock. That's called price acceptance, and it'll get used to trading at that level. And that could actually serve as a base. If the stock breaks out and starts moving higher and then retraces, you could look for this to be a good support level in the future if we get there. So those are just some of the stocks that we are looking at this week. And there's some other stocks, Toll Brothers is a big builder. They have earnings this week. TJ Maxx has earnings. These are both quiet stocks that we're anticipating quiet trade in as we go through the week. But let's take a look at how we traded last week with StoneCo. I gave this trade out on Monday, and this is a trade that we utilize a strangle, because this is what we call a breakout candidate, and we are looking for the stock to break out either higher or lower. Okay, and something is very interesting has happened with this stock. So let's take a look at the result. We can see that this stock popped up, and actually I snagged this screenshot just before we came live, and the current profit in the trade is around $304. Now, based upon the risk of the strangle, when we put this trade on last week, that's a 50% return on risk in just 7 days. In fact, the day of earnings, okay, which was last Wednesday on Stone, the stock had a big candle, which unfortunately is covered by my little circle, but I'm showing it on the chart. You can see this big little wick here. Oh, the stock has rallied since I took that picture. So your profit in this trade, if you were still in it, is going to be even bigger now. Okay. But that big wick that you can see here in the on the earnings date, if we had exited anything above 1450, okay, on that wick, okay, so it rallied up, started to pull back. We could have pulled out and exited the trade at that time. That would have equated to about a $305 win. Okay. And now look at the follow through, bang, bang. And now with the rally in the stock, if you were still holding on to this trade, you would have even bigger rewards, probably upwards of 60% on this trade now. And it's time to take those profits and get on to the next trade. All right. So speaking of the next trade, we have a new stock that we need to go ahead and address, because they're going to have earnings right after market close today. So you'll want to take a look at this and keep it in mind. Here is on Palo Alto Networks. Okay. They have earnings today after market close. All right. We're looking at a strangle on this particular stock, because historical moves are around 13% for this particular stock. And the current pricing of that strangle, well, it puts my break evens in this trade at much less than that. So that gives us an edge in this particular trade. So our trade for this week is on Palo Alto Networks. We're looking for that stock to either break out higher or break out lower. And we're going to look for to take those profits after that move. Now, the expiration cycle that I might use is either this Friday, the following Friday, something beyond. I usually like to go out just a little bit to give myself more time in these trades. But that pricing was for some of the near-term options that I was talking about, to where my break-evens are definitely less than 10%. And we expect maybe a move of 13% or higher on Palo Alto Networks. All right, so that's your earnings call for today, Monday, August 19th. Be sure on trades like this, where we talk about breakouts, I've got a free guide for you at ewotrader.com/straddle-guide. It's free. Just register there, and we will send that to you. And I will show you how I trade these types of potential earnings around, well, the earnings date. Okay. These are basic strategies, but there's certain things you might want to pay attention to when putting them on, either straddles or strangles. And I go over it all within those guides. So that's your free gift for attending today's session. I appreciate you all being here. Have a great trading week. And I'll come to you next week with another edition of Earnings Call. Everyone have a great day.
Hello.